Hey, good morning. That was such a lovely such a good transition. Anyways, shall we get going? Comment allez-vous? How are you? Happy Friday. You made it. Congratulations. You made it. It's the end of the week. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. How are you? You like these glasses? You know, I've made a few mistakes in my life. One of them was when my wife got new glasses many, many years ago, and she said, "What do you think of my new glasses?" And I said, "You look like a Chinese political prisoner." If you could take that back. So anyways, these are about the same, but oh my God, what was I thinking? Keep your mouth shut is usually the right thing. So anyways, welcome. Let's talk Forex, technicals and fundamentals, trader psychology, if you will. It's all fair game. Let me know how I can help, and I will do my best to serve. I've known many of you for years and years, and even over a decade, and some are new. So welcome all. Thank you for being a subscriber. Thank you for being a positive part of the Forex.Today community on YouTube. I propose that we go through dollar pairs, and we can go through gold, oil, and Bitcoin. What do you think? Smell like a plan? Meanwhile, if you could, please click the thumbs up button. That tells YouTube this is quality content. Maybe they'll just promote it, maybe. Not sure how to hit that algo. But I show up here every single day without fail. There's about 10,000 hours of videos on YouTube associated with my work, so that's a pretty good start. If you look at the description below the video, you'll see a link to my book, Strategic and Tactical Forex Trading. You'll see a link to my online training videos. That's fxbootcamp.com. There's also live trading groups there. The fee is $88 a year for the basic membership, and from there you can upgrade your account to the live groups if you want. But you do get 65 hours of training videos. I think that's probably worth $88. There's a link to Trader's Way, an ethical, trustworthy foreign exchange broker that I recommend. See, they don't trade against you. They're an ECN. You know what that means? They connect you directly to the liquidity providers. They don't even look at your trade, really. It just happens, pa-chow, pa-chow, pa-chow. And you go straight through the pipes of the Forex world and straight into the interbanking system. So when big companies like, I don't know, FXCM or Alpari or some other brokers went out of business during the Swiss bank debacle, those banks went out of business. Why? They were trading against their clients. Well, that doesn't sound cool, huh? Anyways, whatever. They went out of business. Trader's Way is just perfectly fine. Worked out great. So they earned my loyalty and respect. Maybe you like that. Maybe you're like, man, maybe I want to trade with an ECN. Hey, it's a choice. Choice is yours. And then very, 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 very soon in the description below, I'm going to include a link to my podcast. Yeah. Oh my God. So, won't that be interesting? Yeah, I'd like you to be part of that as well. Podcast. Oh, look, I still have the ECB press conference going. Hang on. Un momento, por favor. Noise. I also need some feedback because I am starting my book. I've interviewed a couple of publishers already. Would you be so kind as to give me feedback on the subject matter that matters to you most? There's a little survey there. It says, I'm starting to write another book about investing and trading, not just Forex, but stocks, bonds, gold, oil, and Bitcoin. What subject would interest you most? Technical analysis, trading strategies, macroeconomics, trader psychology. Please let me know. Oops, I posted it, but it didn't go through. Hang on. When is the official launch of the super secret fundamentally based alert service? You know, oh my God, I'm going to work on it today, I think. But she should probably already have it. Thank you, Darko. But it's just twitter.com/FXBootcamp. Peter says, what is the monthly and yearly pivot used for? Is it just big picture? You know, every single trade I take looks at the monthly pivot. Did you know that, Peter? Every single trade. So is monthly just big picture, as you said? Well, you have to have the big picture, but yeah, I couldn't trade. Well, I could, but I would not want to trade without looking at the monthly pivot. It's that important. Okay. Now, the second question you're basically saying is, what about the annual pivot? Does it matter? Well, in a strange year, it might look like it doesn't matter. So let me get off of Euro here. Okay. And we'll take a look at this. Okay. Do annual pivots matter? Well, okay. And then this whole gobbledygoo. What do you think? Do they matter? These are all annual pivot points. And that's a random currency pair. I didn't know how accurate or not accurate it was. Good morning, RJ. How are you? We can pick another random one. CAD Swissy. I don't know anything about CAD Swissy. Okay. Okay, great. So I just randomly grabbed CAD Swissy. These are the annual pivots. Okay, and this is the projected top for the year. Okay, and then we came back down. Okay. Do the annual pivots matter? Okay. Well, once again, that's subjective. Do you think they matter? That's last year's resistance pivot. Okay. Okay. We'll grab another random one. Grab something random here. Bitcoin? Let's do Bitcoin. Pachow. Okay, let's redo it. Okay. Okay. Okay, maybe. Randomly look at another one. Oops. How about Rand? That's had a wicked weird year, huh? And we topped out at the yearly R2, which is the projected high. There's the yearly R1. There's the yearly M3. Oops. Yearly M3. Yearly central pivot. Yearly M2. By the way that you trade pivot points says if this is your bottom, this is your top. If you look at last year, you'll see yearly pivot points. Okay. So what do you think? What's your opinion, guys? Are annual pivot points worth using? Okay. That's the annual M3. When you trade pivot points, that's the most important sell you can get during that period, and that targets this green area. So this is actually a trade that I teach. You sell there and you target the green zone. You could have been in that. You could. I'm not saying you should have. Since March, you can see we didn't spend much time, not even a day above it, just maybe an hour above it, and then it dropped back down. Okay. Meanwhile, we did respect this support pivot. We did sell off the M2. We did respect the S2 pivot. And now, right? And now we've come back in. This is sort of the textbook trade. Okay. So what are annual pivots used for? Is it just big picture? I don't understand the concept of just big picture. What do you mean just big picture? Okay. All right, guys, come on. 4 people filled out the form. Really? It takes what, 1 second? Could you please just answer the question, the survey, please? Could you do that, please? I want to know what to write about and what order. I know what I want to write. I want to know what order to write things. So just, if you could click on my Twitter account link and go click, that's it. 1 second, please. Luis says, hey, in the new book, you have to explain the central pivot point daily, weekly, and monthly better. Okay. I promise to do that. Okay. So hopefully that had a positive impact right there. An overview of annual pivot points. Thank you, Adam. I'm just, right? I imagine maybe what's happening is it just says that Twitter is full of bots, as Elon said, huh? All right, so we'll move on.com. I should put this back to euro. Have I told you you're my euro? All right. Noise. So, are you a bull or a bear? Okay, there's two prices a bull would trade. So it just comes down to whether you do it or not. Okay. Awesome, Doug. Thank you. And Doug, in regards to, I think you sent me an email regarding the simulator test. I just, look, it would cost you money, and I don't want to really promote it anymore. If I'm going to kill it, I need to kill it. But if I shared the link, you'd have to pay money and sign up and all that kind of stuff. And so I'm not, I mean, you could, but I mean, I don't know. Okay, so someone else said, hey, they're a bear. Who said it? Manoj says, okay, bear. All right, cool. You'd have to be careful on this time frame. Yeah, and Doug, and I don't remember what it costs. Maybe I'll have to talk to Ryan about it. Maybe we can dismantle most of the site, but keep that there, maybe tweak things so that's all it does is the test. I'll talk to him about it. Dakar says, hey, since euro dollar has burned through all these annual pivots, yeah, that's a big deal. Shows you how strong the dollar is and how weak the euro is. Do you think we are done any more down moves this year? Well, look, again, I pick on people the way they ask the question. That's not the right way to phrase the question. Okay, what I think is irrelevant. So what is relevant? What does the chart say? See, if I'm a concert pianist, it doesn't make me Mozart. I could just play Mozart music the way it's written on a piece of paper. Yeah, I know, Doug. So I'll talk to him. It's just, yeah. Yeah. I guess I got to do something. Look, I'm spending, I think it's $328 a month on something nobody's using. I guess I should do something, right? I should kill it. I mean, dude, that adds up. What is that, $5,000 a year? I got to do something, right? Yeah. So, Doug, why don't you pay $328 and I'll let you try it. now that you mention it, yeah, maybe that is a good idea, Doug. Okay. So, I want you guys to stop asking things about, like, what do I think? Okay? That's between me, God, my accountant, and my bartender. Okay, what do the charts say is the bigger thing? And they say a lot, okay? They say a lot. First of all, there is a prevailing trend. And then when you look at price action, okay, there may be a change of trend. Okay. So what does that tell you there? Well, it looks like we may have breached the 55 on the annual S3. Now, it doesn't explain why. That's one problem with technical analysis, is it doesn't explain why, but it does explain what's happening now. Okay. So, does it say down? I would argue probably not for now. So I would mark this whole area here. Okay. And it's too high to sell. I want you to think about that. I sell lower highs. I don't sell higher highs. So I am forbidden. Okay. Monday says, hey, what time frames correlate to which style? Scalping, swinging, spot, and position. What do you think? Do you scalp on a daily chart? You wait for a 5-8 cross on a daily chart for a 12 pip scalp? No, impossible, right? And what about a position trade that I want to be in for a month? Would a 5-minute chart be appropriate? Probably not. Daily? A daily candles with monthly pivots? Or even yearly pivots? Yeah, probably, right? Okay, so anyways. Okay, what if I want to be in for a couple of days? That's a swing trade. Okay, a day trade is the trade of the day. Okay. Yeah, Forex pivots. You know, I'm tough. I'm brutal on that, but I'm trying to make you guys independent traders so that you don't care what anybody else thinks. You're the only one managing your money. Everyone else is probably wrong. If 95% of people are wrong, then why would you want someone else's opinion? It doesn't make sense to me. So I want you to break down the facts that you have in front of you, technical analysis, fundamental analysis, okay, so that you can make decisions. And you're like, it's irrelevant what other people think. Who cares? Okay. Yeah. All right. So there's our euro. By the way, great questions. There's a lot of good questions. Some of them are quite basic, which is fine. You're starting out. Pay the $88 and join FX Bootcamp. Go through 65 hours of training. Most people in this room have done it 2 or 3 times. Okay? Yeah. Right? So Forex Pivot says, I think if your clients ask you a question, you know, I shouldn't jump all over them. I'm trying to change your mindset. I need to change the way you think. Because if you're asking somebody, it's because you don't know and things might feel out of control. What I'm trying to do is give you control of your behavior in the market. So I'm trying to change the way the thought process is happening. So, right, when you ask me what I think, I find that irrelevant. It's more like what matters is the process to which we are breaking down the information to make decisions. So when we have a technical chart with a higher high, I say, well, look at that. Do we sell higher highs? No. Well, that's just what the chart says. It's not what I think. It's just technical analysis. If there's a higher high on the daily, I can't sell it. It's just technical analysis. No thought, no opinion. Okay. Richard says, it just finally hit me yesterday how you use moving averages. Well, again, my book, Strategic and Tactical Forex Trading, works this way. Let me put this out maybe on a 4-hour or even daily. We can go daily. Okay. My book, Strategic and Tactical Forex Trading, says this in the book. The market is measured by the 2155, or I measure the market by the 2155. Okay? And what that means is my strategic decision is to trade in the direction of the market. Okay? My strategic decision is to trade in the direction of the market. Therefore, I have to define what the market is. So we have the market in general. Where is the market going, generally speaking? And since May of 2021, this market has been bearish. Oh, I see what you're saying, Forex pivots. Yeah. Touche. Okay, so that's it. Going back to what Richard has just figured out. So I wrote a whole book about that. Okay, if somebody said, how were the markets today? I'll say, well, euro dollar's bearish. I don't have an opinion. It's not a bias. There's no fundamental analysis. It's just, to me, a fact. And based on the rules of engagement in my book, I can only sell this. That's it. So it's bearish. I can only sell in a bearish market. You're like, oh, that's easy. Of course it's easy. I don't know what you're doing. Okay. So, but that doesn't tell me price. So I break this down into price action and market forces. The market is bearish, so I can only sell. When do I sell? And that's what these 5/8 crosses are, and price coming back to the moving averages, right? So like this, down, 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 up, up, sell. Okay? Down, 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 up, up, sell. You see the 5/8 in there? Yeah. Down, 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 up, up, sell. Took 2 weeks, right? Down, 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 up, up, sell. Down, 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 up, up, sell. Down, down, up, up. Uh-oh, that was a real challenge. Could it possibly be the annual S2 as the target? Yeah, totally. Because selling here predicts a bottom here. You need to know your pivot points too. Pivot points only tell you market, by the way. Okay? So let's continue. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, up. Okay. Cool, huh? By the way, at one point my book was $88 or $85, and then it was like $68. I don't set the price because I sold the rights to Wiley Publishing. They own the book, and they set the price. I wasn't experienced enough as a writer, since that was my first book, to talk about the price. I don't know, what does a book cost? $25? I never in my wildest dreams did I think they'd price it at 80. So I promised you my next books, I will set the price, and it'll be probably around the $25 mark for a book. I think that's pretty reasonable because I have to pay for shipping, I have to pay for the publishing, I have to pay, and I get carpal tunnel syndrome, right? Like the last book really messed up my arms. So I'm a little bit afraid actually about writing again, but that is something that I promise you. But my thought is, when someone says, "Hey, so you sell when the price is within the moving averages?" Once again, I've been promoting that through books, lectures, webinars, right? Magazine articles, television interviews, standing on stage, standing in the audience, all that. Yeah, the answer is yes. Put it this way. Okay, put it this way. If the market is bearish, so I have to determine the market and the speed and direction of the market, and then I only sell in a bearish market. So I have to understand price action. And then I have to understand when things change. So here's the thing, and I hope it's a wake-up call, and I know I'm coming across pissy. Look, I had a long night. I'm tired. But I addressed all of this for you 15 years ago, and I want you to reach out and get the information. Okay? Look, if you're just having an epiphany now, oh my God, there's dozens of hours of videos you need to watch to get on the clue train. For sure, I'm telling you. Okay? Okay? I'm just like, dude, come on, man. Join FX Bootcamp. The information is there, I promise you. But we also have live groups in which we talk about all of this. You'd be amazed about our meeting last night and before. Like, you'd be amazed what our most affordable, cheapest, if you will, live trading group is like, which is our swing trading group. You'd be amazed at the quality. Grind says, yeah, carpal tunnel is lightweight. I remember I had a nightmare one time, and I was on in my dream, I was on the roof of a tall building, and one of those giant commercial size air conditioners, the ones for they look like they're the size of a house, the type you put on top of a skyscraper. And it was sitting, this industrial air conditioning unit was sitting on my arms. I'd been pinned and trapped under the machine. And it was crushing both my forearms. That was my dream. And that, of course, that's my forearms. And I touch them now and they're even sore. And that, I wrote the book 12 years ago. And so, yeah, it's a little bit scary. Okay. Andrew says, what input values would we need to make our box price action pivots match yours? Well, I change them all the time, right? Depending on what I want to measure. Oh, wrong one. In this case, I'm measuring 250 days. Okay. So guys, I implore you, like, honestly, boot camp is ridiculously cheap. It's really dumb that I charge so little. You just need to join. I don't know any other way. And then you get all pissed off. Oh, this is a bunch of sales pitch. He's just trying to get rich. Dude, you need to turn that off, man. I'm trying to help you. Okay? I mean, come on. Just, I don't know what else. What else can be done? You're fighting the help that's been created. Okay? All this information is there. It's all been created. There's tens of thousands of people that have done it before you. They know. They now know. Yeah, get rich on $88 a year. Like, it's stupid. It's so cheap, it's stupid. So, anyways, if you want help, dude, you got to step up. All right. So going back to this is a very similar situation. Okay. This was discussed, last week, maybe in the week before. But anyways, we got this going on. And then we have this going on. And then we have this going on. And these are all part of the change of direction. CO change, right? Change of trend. And everything changed on this price. And that's why we were here for 4 days straight. Okay. So, what's next? If you want to be a bull, you can do this. You couldn't do it before. Now you can do it. Okay. Richard says, my macroeconomics course, I overly explained it. Yeah, well, I'm an economist. I'm a formally trained. Yeah. Thank you, Forex Pivots. I appreciate that. Yeah, you gotta. I think I wouldn't want to dumb something down. So the macroeconomics course covers a lot of information that normally would go along with, calculus. So there's no crazy formulas and calculus that you need to do, but you need to know how a central banker is making their decisions about the health of an economy. And even the political actors, how their decisions positively or negatively impact an economy. Because we're trying to decide, do we want to invest into Australia right now? Okay. And should we divest our investments from the USD? So who is selling US dollar right now would be one question. And you'd say, oh, well, Bank of Japan, Bank of China, maybe Bank of England. Okay. So you would need to know stuff like that. Okay. Or at the very least, you need to know technical analysis so that you know whether there's a buy or a sell there. Let's see. I thought I had a QB open. Oh, I do. QB. I guess we could bring that up under so I would imagine this is going into neutrality. It's going from a strong sell to a sell back up into neutrality. But it might show in a month from now or 2 months from now, this goes back into selling. So if we look at September, okay, basically flat. October, okay. You see? When you go from September, October, November, there's generally some upward price movement. Okay, up, up, up. Okay, and in the last few years, even December is up. Over 20 years, not quite, but over the last 5 years, yep. So September, October, November, and maybe even December, you would have some upward movement in price based on seasonality. But it doesn't change the fundamentals. So if things do not fundamentally improve in Australia and things get worse globally, the US dollar might strengthen again, but maybe not until December or January. And then at that point, you might have a change in direction technically. See, this is just technical analysis. All of a sudden, the projections, these are 7-day projections, right? 7 days out. the projections start projecting down, not up, in something that should be or not say should, but fundamentally trading would maybe in January favor the US dollar, and then the technicals would roll over and confirm the market conditions, okay, the price action conditions favorable the fundamental market conditions, and you might have a short-term short that goes, let's say by then we go to neutral, but by, let's say, December or January, this goes back to a sell and then to a strong sell. Why? Because your technicals would line with your fundamentals. So like the way you read this chart very quickly is it's like buy the US dollar, neutral, buy the Aussie dollar, buy the US dollar, buy the US dollar, buy the US dollar, neutral. Definitely buy the US dollar. But then you look at technicals and it's going up. Do you understand? Fundamentally, it says down, 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 down. But technically, it says up, 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 up. So I say to you, wait, 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 wait. Okay? Looks like institutions have closed their long positions on US dollars. Well, we can look at that. Okay? If you look at the percentage of the institutional buyers of US dollars, nearly 80% of them are still long US dollar. But you might say, well, the volume might change, right? Okay, so there's the percentage. Okay, 78.56% of traders, institutional traders, are long the US dollar, short the Japanese yen, short the Kiwi, short the pound, short the Aussie. Okay, long oil, long gold, long platinum. And in here, we're kind of more neutral. Okay. Okay. But there has been a change in the contracts. There's a change in the contracts. So if you create a risk-on basket, right, a total of 7,500 contracts less. Okay. Okay, what this shows is really, you should see this instantly. Okay, that the biggest change for COT data was money rolling into euro. That's what you need to see. Dollar is sort of, some contracts came out of dollar. Some contracts came out of Kiwi. There's less, right? Some contracts came out of gold. A lot of contracts came out of S&P 500. But it looks like the vast majority of the money went into the euro. Okay? A lot of money went into selling yen. A lot of money went into selling gold. A lot of money went into buying euro. Okay, but you should see that very quickly. That's why it's displayed this way. Okay. Nominal change in contracts, percentage change. Well, they're both, you should be able to see they're both here. This is contracts. Okay. There's the risk on basket of trades got 0.9% more contracts. And there's the total open position in number of contracts. Okay. So anywho. Take a look at just the majors right now. USD yen is the best performer to the upside. Aussie dollar's the best performer to the downside. Okay. The way that you read a scatter plot is fairly simple. It's only calculus. The math is actually breaking this. That's supposed to be a vertical line into quadrants. Okay. And QuantBox is analyzing itself. It said everything in this quadrant, QuantBox has told you it was going to go up, and it did go up. Everything in this quadrant, okay, QuantBox told you it will go down, and it did go down. So this is where, do you guys remember 7th grade or 5th grade, you were learning a minus is positive and a positive is positive? Okay? It was predicted to go down and it did go down. So if you shorted, you made money. So that's positive. But these were predicted to go up and they did go up. So therefore, those are double positives, which are also positive. Okay? And these underperformed. They were supposed to fall, but they went up. Today, this is like now. They're slightly up. So it's saying, yeah, okay, you can look at it like these failed, or you could look at it like those are tomorrow's. Okay? Those are tomorrow's rallies. Okay? Maybe those are tomorrow's trades because they're sort of out of position, if you will. Okay? And what do you see here? US dollar strength, US dollar strength, and these haven't fallen based on US dollar strength. You see? Right? Easy, easy. Okay, they should revert to the mean and they should fall. One would think. Anyways, nice and easy, huh? You can do that for majors or for minors too if you want. Oh, I'm on majors, right? Okay, many things have not, have underperformed. These performed very well. These performed very well. This one's disappointing, and these are disappointing. Okay? So once again, That's how you use a scatter plot. You can very quickly see how the math is doing. Okay, so once again, everything in this quadrant, the algorithm said will go up, said yesterday, said earlier, said whatever. The math says those assets are going to go up. And they did go up. But the math also said these are going to go up, and they didn't go up. So that's why, okay, it was expected to go up, but it fell, so that's a negative. These were expected to go up, and they did go up, so that's positive. So that's how you handle that calculus. So they're, right? Some performed well, some did not perform well. Okay? Gold was supposed to fall, and it did fall. A lot, 1%. Oil was supposed to go up, but it fell. So, performed beautifully, underperformed. Notice the change here. Okay, only 50% of retail traders are long oil, but 77% are long gold. Look at that, huh? 77% of gold traders are long gold, retail traders, and gold fell 1% today. And of course, what this math is telling you is the algorithm predicted it would go down. The math predicted that it would go down, and it did go down, and yet retail traders are buying. Ha ha! Ha ha! Sucks to be retail. It's because they don't know. It's not their fault. They don't know. They're doing the best they can. Okay. Sorry to go all mathy on you. I love it, man. Okay. So, US dollar has been strong over the last couple of days here. What you need to figure out is what you want to do next. Okay? I can't sell a higher high, but I can buy a higher low. That's just technical analysis. That's not talking about the Australian economy or new policies by the Chinese government, or it doesn't talk about what the S&P 500 is doing today and how that impacts the value of the USD. It doesn't say any of that. Okay? Oops. If you want that, that's all about bias. What we're looking at here is a higher high, and I have rules of engagement. If I'm a bear, I could just simply do nothing. Okay, I can wait for something like this. Okay, that's my plan, right? That is one plan. If I'm a bear, I just sit back and I wait. I might have to wait 3 months. It's okay. Okay. Or I can make a technical decision and say, I can do that, and dollar will remain weak as it has been since about the middle of the month, since that CPI number. Okay, that dollar is weakened, and it'll continue weakening for a while. What does that mean? I don't know, for a while. And then you say to me, Wayne, how do you decide? I don't know. I put some rice and gold coins into a monk's bowl and he prays for me. I don't know. You make a freaking decision. I don't know how you make your decision, but a decision needs to be made. Wait, because I can't sell this. Do you understand that? That's not a decision. I can't. There's no decision to be made there. So I either buy it or I don't buy it. It's a binary decision. Well, Darko, it's sort of like, yeah, we did talk about gold that way last night. It comes down to this. Retail traders make most of their decisions based on the short-term charts. They don't know 20 years of seasonality, right? That's not on their mind. They don't know about the ebb and flow of the demand of gold. They're not thinking about how central banks actually carry out their policy. They don't think that a central bank might sell gold to buy their own currency back and strengthen their currency, like the Bank of Japan is doing, or like the People's Bank of China is doing, or like the Bank of England is doing. Okay? Maybe the ECB will start doing that. Sell gold and buy euro and strengthen the euro and kill inflation. I mean, but a retail trader doesn't think that way. So, and they may not have that the data, they might not have the education, all that kind of stuff. So all they have is technical analysis. It doesn't make them wrong, but it makes them very, very, very short-sighted. That's all. So if 77% of retail traders are on the short side, then they might be making money today or the next day, but there's a big imbalance and they'll probably at some point get run over. And larger institutional traders will enter, run them over. But that's okay. Retail traders will pick themselves up and then they'll go long, right? Because the market technically would have changed. Even though it's fundamentally driven, the technicals eventually will change and show the new change of direction, and then retail traders are going that way. But it does lead to some vulnerability for the shorter term traders. Okay. So with all the information, remember, I'm not asking you what you think. I'm telling you what you should be thinking about. Oh, my pleasure, Darko, anytime. I'm showing you what you need to be thinking about. I don't have the answer any more than you. I have to make my decision. You need to make your decision. We can agree, we could disagree. It doesn't matter to me. Okay? Right on, Catalan 3 DJ. Hey, by the way, do you happen to be an old boot camper from long ago? From like 10, 15 years ago? Just wondering if I recognize the YouTube handle. Yet, Forex pivots, I really don't like the term smart money and dumb money, because I look at institutional positions, and very often I disagree with them. Yes, they're institutional, but it doesn't make them right. It doesn't make them smart. So I look at it as long-term investors versus short-term investors. Now, in the super secret, fundamentally based alert service, aka this thing that I'm not mentioning, but you might see, we use sort of the classic COT data for that, but you can drill into a newer version that might get you to smarter money, more defined, right? Defined more specifically as like money managers. I don't use that data, but I could. I would want to use, because it's more that data is new out of the COT, out of the CFTC. And I think its importance would be the relative size of the positioning and the change in the positioning, right? Oh, thank you, Jim, for that link. That's awesome. That's not specifically to the training course, but that should get you there. So, right, Sling Ray, we removed the hedgers out, because we're not interested in hedgers. We're interested in large institutional investors that are speculating. They're trying to make a profit, right? So when we get this data, 78.56% of institutional investors are long US dollar. We're not counting hedgers. We're only looking at institutional investors that are buying dollars to make money. Okay? 38.74% of institutional investors are long the Canadian dollar. Okay? And there's been a 3% increase in that. A 3% increase in the number of contracts long the Canadian dollar. So that's quite good, but they're still 61% short. So it might be early in the move. Hua? Okay? Nonetheless, here's the thing. Okay? Well, no, I guess we'll, no, okay, so, okay, let's interpret this. Okay, if 80% of investors are buying dollar and 60% are selling Canadian dollar, okay, we would want to buy this pair because it favors USD over CAD. Most are buying, most are selling, so you would think up. Now, the rationale for that is favors the US, 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 favors Canada, favors Canada. Okay? All right, so things are still very much bullish for USD CAD. Okay? Based on 20 years and 5-year averages of seasonality, this time of year it does tend to go up. Here's the thing. It's not going up now. Do you understand the power of that? It's not a good trade today. Where did you guys go? You're over here. It's not a good trade today. It's not a good trade today. But an algorithm gathering and measuring and rank and how you say it? Gathering and calculating economic data, right? Spits out one thing, but it's also gathering technical analysis. And this is the key. This is the key, guys. This is the key. You sit here going, all right, I want to be a bull, but not now. Do you understand how powerful that is? I want to buy. I want to buy. I want to buy. Just not today. Oh my God. This just changed absolutely everything in your trading. Now you would be trading like a professional. You could sit down and have a conversation with somebody and say, oh my God, I want to buy the USD CAD. The thing is, I'm out of position right now, so I'm waiting. You are now behaving like a professional. Okay? I'm telling you, this is not something that will improve your trading. The super secret fundamentally based alert service will not improve your trading. Okay? It will change the way you trade. It's that simple. Or you just, whatever, keep doing what you're doing, you'll be fine, whatever. Okay? But this will change the way you trade. It won't improve your trading. It will change the way you're trading. And I don't think I need to convince you that much that you might have been trying your best for a very long time, and you've discovered that you don't have all the pieces to the puzzle. You don't know what it is, but you're like Neo staring down that empty street. And you just know there's something else out there. You just don't know what it was. But you have tested and you have tried. You've done this strategy and that strategy, this guru and that guru, this tool, that tool, this algo, this indicator, that algo. And you know you have most of the pieces. If you're that person where you know you are close, that you should be good enough, but you're not for some reason, then I have your missing piece. It will change the way you trade, but not what you trade or how you trade. You know you're, right? This would be like, if you know you're a good trader, but you're not getting the results you need, it's not like what indicators you're using is holding you back. You know, like you're good there. If you're that person, that's what this tool is for. This is like you started a hedge fund and you have hired a quantitative analyst with a PhD in astrophysics, right? In astrophysics. And they're quanting huge pieces of economic data and spitting out the outcome of like, yeah, dollars, US dollars better than the Canadian dollar. And you're like, cool. And then you go to your chart. Do you understand? Then you go to your chart and you're like, oh, I want to buy USD CAD, but not at this price, not with these technicals. And you're like, yeah, maybe next week. Oh my God, now you've gone from trading the way you've been trading for years and years and years and have not been satisfied with the outcome to suddenly now you are trading like an institutional professional investor. Okay? And maybe that's worth $79 a month. I don't know. Okay? I have to pay licensing fees. I pay licensing fees whether you use the tool or not. So you either step up or you're not ready. I don't know where you are in your career. If you're young and new, this won't save you because you probably still suck at trading. But for everybody else that's been trading for a while and you know you should be good enough but you're not, this is it. I'm telling you, this is it. You're going to start trading like an institutional investor. And if you ever want to manage money one day, you're going to need 2, 3, 4, 5 years of track record showing you know how to trade like a professional institutional investor. And whether that's your own money or not, I think right? If you want to trade other people's money, that's one thing. But if you want to trade your own money, especially if you're in retirement, you don't want to sit and scalp all day, do you? That's what you want to do all day? I thought retirement was supposed to be like golfing or sailing or watching golf and sailing on TV. I don't know. I'm not ready for retirement. I don't think you want to sit in front of your charts 9 hours a day if you're in retirement. Or let's say you're in your career years and you have a family to take care of and you have a job. You can't sit around all day and scalp. I love scalping. I'm not saying anything mean or bad about scalpers or spot traders. Perfectly fine. It just takes time. Many people don't have that kind of time. They're retired and they'd rather make, medium to longer term trades and golf most of their hours. If you're raising kids or you have a spouse and you got a job and you're like, you want a second income and maybe you want to replace your job and become a Forex trader, but now's the time, you only have enough time to trade like an institutional investor. You don't have the time to sit and scalp. You can't make 5 or 10 or 20 trades a day when you have a full-time job. Okay? It's for somebody who wants to let their winners run. And here's the thing, they know why. You know why. You know why your winners are running and why you let them run and why they're actually running. You understand the why. It's not because of the 2155 cross, but you'll see the 2155 either confirms or denies. Okay? So anyways, this was developed for you. Use it and change the way you trade, or keep doing what you're doing. And maybe one day you will see the light and you go, now I get it. It's cool. Maybe you're not ready. Okay. Richard says 65% of it is mental and coming up with a process. Yeah, but think about the mental. Okay? It's hard to have confidence in something you don't understand. It's probably impossible unless you're foolish and you just trust. Okay. Confidence and sort of the mental sharpness, it's not the process. The process gives you information so you understand and you made a decision and now you trade. That's the part that's mental, because somebody could say, well, Wayne, why are you buying Aussie dollar? And I'll say, oh, that's a really good question. Well, here are the 3 reasons why I'm buying. How long do I expect to be owning these things, right? When it'll likely stop going up, what I'll do about it then, and like 3 challenges that might wreck my trade or wreak havoc on my trade so it doesn't perform as well as I thought. And all of a sudden you're like, dude, that's like an entire paper. Yes, I can give 3 reasons why. I can give you ideas of how long. I can back all my opinions up with hard fact. So it's not opinion anymore. I can say, look at institutional trade positioning, look at retail trade positioning, look at seasonality, look at the economic conditions comparatively between these 2 economies, right? So here's how I got to all of this, right? And here's where I'll think it'll end and all that kind of stuff. But here are the couple of things that could challenge this hypothesis of mine and where I'll know to get out. And now it sounds intelligent, not just you're reacting to price. But you still have to know how to trade using technical analysis, because if you made the decision to sell Aussie dollar, you can't sell Aussie dollar now. And if you don't understand that, then nothing will save you because you don't know anything. That's the real thing. Let's be factual here. If you have no understanding of fundamentals, no understanding of global macroeconomics, no understanding of seasonality, and you're very mediocre at best on technicals, then you need to get better at least on technicals. Okay? You need to do something to improve, but there's so much you don't understand, then you need to go back and start with technicals, because you need to be able to get to a fundamental bias and say, now or not now, and that's technical. So for example, this is a November sell pivot. If you were a bear, you could have taken that a day or 2 ago. It's done now. Okay? And that's a very dangerous trade, by the way. You could do it, but I might disagree with you, even if we're both bears. So what's next is maybe a double top would be more interesting. And then a lower low, lower high would definitely fire for effect. Fire for effect right here, baby. Without a doubt. Boom! But that's just technical analysis. I might have been thinking this whole time that I want to sell this. The thing is, do you have enough experience to stop trading down here? By the way, I did. And then let it run up here, and then let it redevelop into something that then becomes a trade setup. And you trade back in the direction of the prevailing trend. Most people lose money here. Most people lose money here. It's these consolidation periods that they don't understand. Okay? Right? You buy here and you think it's going to go up. Okay? And then it drops, and then you sell here, you think it's going to go down. Okay? And then you buy here because you think it's going to go up. Okay? And you're always late. Okay? If you understand fundamentals, you would say, well, this is supposed to be happening right now. What we're not sure is how long this current move will last. And we're in that period where not sure is very possible. Meaning there's probably a 50-50 chance that it does this. Okay? So that's your decision today. But how will you react if instead it does this? Okay? And because I have 20 years of data, we discussed this yesterday in the swing trading group. Okay, we have information on how long this could last. We already know that. And a retail trader wouldn't know that, would they? Going back to the technicals, if you are long-term fundamentally a bear, how should you behave if price does go up here? Well, once again, you have to understand technical analysis. I've taught you how to counter trend trade in the conditions in which you would counter trend trade and the conditions in which you would not counter trend trade. So you would incorporate that in a possible plan for selling if you get the technical opportunity. But once again, having a bias won't save you if you suck at trading. Plus, you'll never believe in it until you get really good at technical analysis and find out there's still a missing piece. And then you got to get to that point where you're like, oh my God, I need that missing piece. So you need to put years into your technical analysis, I think. So, like my super secret fundamentally based alert service will not improve your trading if you don't know how to trade. Okay? But if you know there's a missing piece, I have it, and the missing piece is that you'll understand why the market is doing what it's doing, and it will change the way you trade. Not with what indicators and what EAs and all that kind of stuff. You have everything you need. You know it. That's what I'm saying. You know it. You don't need different moving averages. You're like, Wayne, which pivots do you use? This kind of pivot or that? Dude, it doesn't matter. You probably have enough. You're probably good enough. You should be doing better, but you're not. You know it. You feel it. It's in your gut. It's in your brain. You're frustrated with it, and it's not your fault. It's not your fault. It's ready now. There's a few dozen people in this chat right now that have been using it for months. I just haven't launched it. I'm a busy guy. In fact, I got to work on it today because we've been working on a big technical challenge that will really, we should be able to break through maybe even today or tomorrow, maybe over the weekend. So I'll work over the weekend. But for those that are on the retail membership, the retail subscription, I'm working on something right now that is going to blow you away. If I can get this technical thing done, it's going to way over deliver. Way over deliver. It's going to take what you get now and make it 10 times better, probably. It's going to be a 10x as what do they call him? Is it Uncle Grant? Would promise, right? Like, it's coming, man. Yeah, you're in the lifetime deal, but yeah. Well, yeah. I mean, the weird thing, Grind, I guess if I guess I laugh at myself because it could be a better, it could be like a business or something. What I did is I have a tool for you. You could use it. I'm trying to launch it and put it together and try to have fun with it. I'm doing so many other things. It should be a big business, but I don't think of it that way. I think of it as a big help. So you use it or you don't use it. There you go. Right? I could make it my big thing. It could be the big thing. It could be I can make a lot of money. I can get my Lambo. But I'm busy living my life and trading and trying to be interesting and trying to be a good father, and I want to write a book and I want to start a blog or a podcast and I want to do these things and I am doing these things, and so I'm spread thin. So here it is. I built this amazing tool. I'm paying a lot of money for it, and you can use it and change the way you trade and find huge success, or not. Whatever. I pay for it either way. So you either chip in and become a subscriber. Whether you subscribe or not doesn't make a difference to me, but it will make a difference to you. So it's there. So when people are like, Wayne, I need help. Dude, right there. It's like I'm giving you a PhD for $79 a month. Boom. Use it, don't use it, I don't care. So, right? So anyways, all right, I got a lot to do today. Oh! Thank you for being part of the community. Thank you for filling out that Twitter forum about the order in which I should write my books. It updates several times a day, Hammered Gaming, depending on which API we're pulling from. So it pulls from dozens of different sources of information. So it depends. But, right? But let's say over the weekend, you could be looking at the COT data and all that kind of stuff, right? Oh, yeah, Jim. Why don't I do it now? Hang on. Where did I see that? Yeah, I can't find it. Man, it's funny how you get stuff you're not thinking about, and then when you're trying to find it, you can never find it. Like YouTube knows you want to watch it, but then when you go to look for it, Is it this one? Maybe the thumbnail. I think it's, I found, I think, a video.
Southwest Strip 3, contact LA Center 124.2. Have a great day.
And I can't, my speaker's not working. But it's not the one. It's a reenactment of it. So anyways, yeah, I'll see if I can find it. It's pretty funny. It's pretty funny. Yeah, I'll see if I can find it. Yeah. All right. So, yeah, I'll see if I find it. No, there's no lifetime membership to the super secret fundamentally based alert service. But that's it. All right. So anyways, got to go. Peace on earth. May the pips be with you. May our profits be above average. Cheers.